Elon Musk's economic insights. Elon Musk opens by expressing his belief that the economy is headed towards a recession in 2023. He acknowledges that the exact magnitude of this recession is subject to debate, but suggests that it could range from a mild to a moderate one, potentially comparable to the recession experienced in 2009. Musk advises a cautious and prepared approach in light of the anticipated economic downturn. He emphasizes the importance of preparing for the worst-case scenario while maintaining optimism for a more favorable outcome. This cautious approach aligns with typical risk management strategies employed during times of economic uncertainty. A significant point of concern for Musk is the use of margin debt, particularly in a volatile stock market. He strongly cautions against taking on margin debt, which involves borrowing money to invest in stocks and can amplify both gains and losses. In a volatile market, the risk of substantial losses is heightened, making margin debt a risky proposition. Additionally, Musk recommends maintaining a cash reserve, figuratively described as keeping powder dry. This cash reserve provides financial flexibility and liquidity during a market downturn, enabling investors to capitalize on investment opportunities when asset prices are lower. Musk shares a historical reference to emphasize his point. He mentions Brett Johnson, the former CFO of SpaceX, who experienced the dot-com bubble in 2000 while working at Broadcom. Musk highlights how even strong companies like Broadcom face significant declines in their stock prices during a market crash. This historical example serves as a cautionary tale about the potential speed and severity of market declines. Elon Musk acknowledges the cyclical nature of the economy, characterized by periods of economic expansion followed by recessions. He notes that the current economic expansion has lasted for 14 years, which could indicate that a downturn is overdue. However, he also underscores that both economic booms and recessions have finite durations, implying an eventual recovery, which he expects to occur around Q24, likely indicating the fourth quarter of 2024. Finally, Musk touches on some factors influencing the economic situation, such as rising interest rates and a correction in the stock market, particularly among growth and software stocks. He acknowledges the complexity of economic predictions and the challenges associated with assigning probabilities to economic scenarios. Overall, Elon Musk's statements reflect a cautious outlook on the economy, with anticipation of a recession in 2023. He offers practical advice for individuals and investors to navigate potential economic challenges, emphasizing the importance of preparedness and risk management in uncertain economic times. Elon Musk's remarks. Elon Musk's comments revolve around the application of information theory to money systems, particularly highlighting the improvements brought about by services like PayPal and discussing broader economic and competitive dynamics. Elon Musk begins by drawing a parallel between information theory and money systems. He suggests that information theory concepts can be applied to money to help explain why one monetary system or action might be superior to another. In essence, he sees money as a medium of information transfer and seeks to optimize its efficiency. Musk reflects on the impact of PayPal, a payment service company he co-founded. He emphasizes how PayPal improved the speed at which money could move compared to traditional methods like mailing checks. In the early 2000s, before the widespread adoption of digital payments, mailing physical checks was a common practice for financial transactions. PayPal enabled real-time exchange of money, facilitating faster and more efficient financial transactions. Musk highlights the importance of information efficiency in financial systems. He likens the ideal monetary system to an internet connection that offers high bandwidth, low latency, and minimal packet loss. In this context, high bandwidth signifies the ability to transfer large volumes of financial information, low latency indicates swift transaction processing, and minimal packet loss signifies the accuracy and reliability of transactions. Musk envisions a transition from heterogeneous COBOL databases running on mainframes, which typically use batch processing, to a unified real-time financial system. This transition would not only enhance information efficiency, but also improve security by eliminating the need for batch processing, where transactions are processed in batches, often with delays. Musk touches on the competitive landscape in global markets. He acknowledges that achieving competitiveness, especially with companies in China, can be challenging. He underscores the importance of a dedicated and hardworking team to succeed in a highly competitive environment. Musk emphasizes that the primary purpose of a company should be to produce useful products and services for society. He believes that businesses should focus on their core mission rather than getting entangled in political or unrelated activities. He emphasizes that the core mission of a company should not be overshadowed by other considerations. He discusses the importance of financial preparedness for companies, advising CEOs to aim for cash flow break-even or extended runway to navigate potential economic challenges. He anticipates that the recession will end around mid-2024 and advises having sufficient financial buffers to sustain and grow during this period. In summary, Elon Musk's remarks revolve around the information efficiency of monetary systems, the transformative impact of services like PayPal, the transition to real-time financial systems, and the need for financial preparedness in a competitive global economy. He also emphasizes the core mission of companies and the importance of staying focused on their primary objectives. Navigating the shifting business landscape. In 2022, the business and financial world found itself grappling with a series of impactful developments that have reshaped the landscape. These developments encompassed increased regulatory scrutiny, transformations in the innovation cycle, and shifting perceptions regarding the capacity to outspend regulators. One pivotal trend of the year was the heightened regulatory focus on major technology conglomerates, collectively referred to as Big Tech. This shift signified a mounting resolve to hold these tech giants accountable for various facets of their operations. Regulators worldwide initiated investigations and implemented measures to ensure compliance with antitrust, privacy, and market competition regulations. The consequences of this regulatory surge have reverberated across the tech industry, with potential implications for its future trajectory. Simultaneously, this regulatory pressure induced a transformation in the innovation cycle within the tech sector. The prevailing belief is that simply outspending regulators is no longer a sustainable strategy. As a result, businesses have had to recalibrate their innovation approaches. This shift has far-reaching implications, potentially shaping the development of new technologies and strategies. Companies are now compelled to explore innovative avenues that align with regulatory guidelines while maintaining their competitive edge. One noticeable trend that emerged amid these changes was the erosion of confidence in the spending practices of big tech entities. Many expenditures came under scrutiny, with allegations of wastefulness and questionable decisions. The collective perception of such practices contributed to big tech being seen as one of the major losers in the business landscape of 2022. The cryptocurrency realm experienced its own significant event in the form of the FTX scandal. This scandal exposed scams, fraud, and questionable practices within the cryptocurrency industry. Its importance extended beyond the crypto space, revealing systemic issues related to due diligence, governance, and media coverage. The FTX scandal served as a stark reminder of the importance of rigorous oversight and scrutiny in emerging industries. Additionally, the transition in leadership at Disney, with Bob Chapek assuming the CEO role, faced notable challenges and criticism. Chapek's tenure was marked by controversies, particularly concerning political disputes that impacted Disney's operations and reputation. Lastly, concerns regarding the Federal Reserve's role and actions in response to economic trends weighed on the minds of business observers. There was a perception that the Fed was attempting to catch up with economic developments, potentially risking oversteering in its efforts to guide the economy. Unpacking the disturbing trends. 2022 bore witness to a multitude of significant trends and challenges that reverberated through various sectors, sparking discussions and concerns. Two prevailing trends that garnered substantial attention were profligate government spending and the unsettling collusion between the government and big tech, both of which have significant implications for the future. Government spending spree. The first trend that took center stage in 2022 was the continued profligate spending by the federal government. With record deficits and escalating debt levels, the year saw the federal government adding another staggering $1.65 trillion in spending by its end. This massive influx of funds left many perplexed, as accountability for these expenditures seemed lacking. The situation was described as the Christmas tree of Christmas trees in terms of bills, highlighting the sheer scale of government spending without adequate oversight. The implications of this trend are far-reaching, raising concerns about fiscal responsibility, long-term economic stability, and the burden placed on future generations. The absence of measured spending practices has become a significant challenge, and addressing this issue is crucial for financial sustainability. Government Big Tech Collusion. Another deeply troubling trend that emerged in 2022 was the perceived collusion between the government and big tech, primarily concerning censorship. This collusion raised concerns about the erosion of free speech and the potential for authoritarianism to take root in democratic societies. The revelations, often referred to as the Twitter files, shed light on the cozy relationship between social media giants like Twitter and government agencies like the FBI, DHS, and the Pentagon. The implications of this trend extend to issues of civil liberties, government overreach, and the preservation of democratic values. The disturbing nature of this relationship calls into question the role of technology in shaping political discourse and controlling information dissemination. That's all for this video, folks. See you next time.